Hello and welcome back to Money Never Sleeps. My name is Bob Cruces from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 8669-733627 or visit us online at mandawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. Listeners, you probably already know that life insurance offers essential financial benefits that can help keep your family going after you're gone. But there's so much more to it than that. Other ways life insurance can bolster your financial strategy that you may never have heard of. That's what we're talking about today. First, let's go over some life insurance basics. You're probably aware that one of the core benefits of life insurance is that it provides your family with tax-free protection if you die prematurely. It means your family can continue to make mortgage payments, keep food on the table, keep saving for college, and so on. It means their lives won't be totally upended by your passing and the loss of your income. However, some types of life insurance also offer you a way to build wealth. You can actually use it as a source of tax-efficient supplemental retirement income. Are your ears perked? Let's dig deeper. Most insurance policies are made up of two separate components: insurance, the payout your family gets when you pass on, and the cash value of the policy. The cash value grows, tax-deferred, until distribution. In other words, the value grows until you decide to withdraw some of the value. That's the part that can offer you some supplemental income in retirement if you choose to use it that way. Now let's go over the different types of life insurance. Term life insurance provides death benefit coverage over a specific time period. Term insurance is temporary, which is why many people use it for extra protection while raising young children. The upside of term life is that the premiums are often the most affordable. But term life insurance doesn't offer cash value, and when the term is up, you likely won't get anything back. If knowing that your family will be covered is enough for you, great. If not, you could look into exchanging your term policy for a permanent one, but you may have a limited selection of products to choose from, and it could be expensive. If you want an insurance policy that's also an investment, you may want to look beyond term life insurance. Another option is whole life insurance, which is exactly what it sounds like. It provides coverage for your whole life. Whole life insurance offers guaranteed interest rates, and the premiums and death benefits don't change. The upside of whole life insurance is stability, but it doesn't offer the level of flexibility that other types of life insurance do. Ultimately, that means if you have a change in your financial circumstances, a job loss, for example, you won't be able to change your premium or coverage. Universal life insurance offers cash value and insurance, but is more flexible than whole life insurance. Both your premium and benefit can be adjusted, which comes in handy when you have a down year and need to save some money. On the flip side, you need to stay on top of the cash value in the savings component to make sure you have enough to cover the cost of insurance. Usually, universal life insurance comes with a guaranteed minimum growth rate. Finally, indexed universal life insurance comes with flexible premium payments and benefits. However, with indexed universal life insurance, the cash value grows based on the performance of external market indexes, like the S&P 500 or the Dow Jones Industrial Average. As a result, indexed universal life policies typically offer a lot more growth potential than the policies that offer guaranteed growth. Alright, now that we've covered the different types of insurance, let's go over the tax advantages of life insurance. First, there's no current income tax on the interest or earnings of your cash value. Second, if you borrow from the cash value, you don't pay income tax on that amount. Most of the time you don't anyway. Third, there are usually no taxes on death benefit proceeds. Now, if you're interested in the tax benefits of a Roth IRA but your income exceeds the limits, life insurance could be a viable alternative. Remember, a Roth IRA is a retirement account that you fund with money you've already paid taxes on, which means you're not taxed when you withdraw the money. There's a cap on how much you can put into a Roth account every year, and you can't withdraw it before age 59 and a half. With life insurance, you may be able to contribute more. You can also withdraw money from it before age 59 and a half without being subject to the 10% penalty you incur on early withdrawals from a Roth. Your heirs also receive the death benefit immediately, whereas a Roth account could have to go through probate, which could take months or years. Now here's how you can use a life insurance policy as retirement income. Earlier in this episode, I covered the tax-free withdrawals you can take from the cash value of your policy. You can also take loans against the policy. If you take withdrawals, the death benefit will be lower. If you take out loans, you can pay the money back during your lifetime, or the amount of the loan can come out of the death benefit after you pass away. In simple terms, life insurance can help you protect your family, preserve your assets, and even prosper. But before you run out and buy a policy, it would be a good idea to sit down with a financial services professional who can take a look at your financial situation and help you determine which, if any, type of life insurance policy is the best option for you. If you have any questions about your retirement magic number, your retirement strategy, or any other parts of your financial strategy, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure: all matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.